Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about King Dollar. Everyone's talking about King Dollar. Dollar's going up, dollar's going up. It's interesting, right now is the filming of this video. The dollar is hitting a resistance line that goes all the way back to 1999. If you talk to my good buddy, Crypto Charts Joe, Joe has been showing me some amazing charts, and he goes all the way back to 1999. If you run this line, every time the dollar got strong, it would hit this resistance line. And right now, literally at the 104 mark on the DXY, for anyone that's new to the channel, it's the DXY is an index of how the dollar is performing in strength relative to other currencies. And it is weighted inside of that index really heavily on the euro. Let me know in the hashtag. I want to say it's like 24% euro, and then a basket of other currencies. And I call it all the time, the dollar is the best smelling turd in the punch bowl. And it's true, because they're all fiat currencies. They're all based on nothing. They're all getting printed to oblivion. They're all going down in value. And you know that's true because of inflation. Now, we've said that before, okay? I've gotten that out. Now, right now, the Federal Reserve is raising rates. They want to raise rates to do two things. Slow inflation because they printed too much money, and they want to give perceived value to the dollar, right? Like, oh, hey, and I heard some people say this earlier today, it blews me away, that people are going to be diving more into dollars and they're going to be saving more at an alarming rate. As far as, you know, since in the recent past, we haven't seen savings at this rate because the dollar has no value and you don't get any interest from it in the banks. So now this is going to change all of a sudden, that the Fed's going to raise rates and people are going to start saving. That is absolutely not true. The fact is the Federal Reserve cannot 100% raise rates, and I'd be shocked if they got it over 1%, but they cannot raise rates to where it is profitable enough for you to go, what are you gonna do today? I think I'm gonna put my money in a savings account because I feel that the interest I'm gonna get is gonna be worth more than the cars going up, the clothes going up, food going up, everything else going up. That's not gonna happen. Let me show you a little bit of the recent past. In 2015, we saw the Federal Reserve said, oh, we're gonna start raising rates because things were getting dicey back then. And not a lot of people understood what was going on, but the companies were having a really hard time. The sales were waning. Banks were not getting along. I'm trying to make it like really light sort of for you guys, but there's a lot going on. Federal Reserve said, we're gonna start raising rates, right? We gotta start bringing stability to our currency because we'd been doing quantitative easing after quantitative easing. We even tried changing the name to Operation Twist to fool you guys. It's not fooling you. The markets aren't liking this. We need to bring strength to dollar. We started raising rates. The markets rallied like, yeah, finally the dollar's strong. And I'm like, this is not gonna work. And within 2 years, they'd gotten the Fed funds rate from 0.25% to 2.25%. And everything started to fall apart. Why? Because companies couldn't pay the debt. They couldn't service the debt at those rates. It just wasn't gonna work, right? It was blowing margins up. Everything started to flat out crash. The Dow Jones literally took like an 18% dip or correction from October of 18 to, I think it was like Christmas Eve of 2018. Most people don't even remember that. That is a big clip. You want to talk about right now, like, oh, things are going bad in the stock market. They don't even remember 2018. So the facts are the Fed couldn't even raise it to 2.25 points. But since then, they've printed a, boy, am I want to say this one interesting little term, but they're printing a boatload. A boatload, you know, like a boat, and it's loaded. What are you shipping today? Cash. Well, look, you're sinking. The water line, it's going down. It's okay, it's just cash. They printed a ton of it. And so to even think, to even comprehend, yeah, we could raise rates. We're gonna do this. People are gonna wanna save money. It is absolutely nuts. Now let's talk about gold and silver. There's a lot of people going, but gold and silver's going down. Yeah, it's because the dollar is going up. So gold and silver, as a matter of fact, a lot of things are going down, right? We've seen all kinds of things going down, but people don't understand the reason why the dollar is going up is because the market's crashing. People are, hedge funds and traders are selling their assets right now to cover margin calls. They don't want to talk to you about that. You'll find out soon. You will find out. You're gonna find out in the headlines when their quarterly earnings come out. Hey, we had to write down this much. We screwed up. It's like Blackstone, you know, having to give back that flagship property in Manhattan, and it doesn't come out until their quarterly results. So as I'm showing you right now what's happening behind the scenes, like in real time, you get to see it like 3 or 4 months later in the quarterly earnings. When they go, yeah, Blackstone goes, yeah, we had to give back this property literally to the bank at a 50% loss. And again, remember, Blackstone had a property that they had a lender for, okay? These guys aren't as big as you think. They're leveraged to the 9. But I'm telling you right now, they got a lot of assets under management, but they got a lot of debt too, just like Lehman Brothers, all right? So my point being is that gold and silver are going down, and this is actually a very rare opportunity because for the last 2 years, premiums shot up because demand is out of this world. Investors are buying up precious metals, physical, and they're storing it. And if you guys want some links, I've got places to store it. I physically store my gold. When you get to a certain level, I'm not telling you this for everybody. I say if you don't hold it, you don't own it. But at a certain point in your investing life and you get to a certain level, you just can't do that, you know? And you need liquidity too. So my companies vault gold. My companies take our profits and we book them and we literally set them aside. I'm telling you, that's one of my strategies. And we vault it because we need the liquidity. If another investment comes up, we cash it out. It's back in our corporate accounts in 24 hours. And that's what we do, right? Personally, you know, yes, if you don't hold it, you don't own it. I agree. But this is one of these interesting times where it's a blessing, right? You bought at a certain price. It came down because I think silver's fallen like, I'd say $4 or $5, right? In the last couple months. But the premiums have stayed elevated, but they haven't gone higher. So what's happening is when metal goes down, speculators go, I don't want it now, it's going down. You're like, well, wait a minute, why'd you buy it in the first place? Well, I bought it because the Federal Reserve's printing money like crazy and it looks like the market's gonna crash. And every time that happens throughout history, gold and silver revalue. They go up in value, just like they did from 2008 to 2011 or 2010, something like that. I said, okay, so you bought it for that reason a month ago, and now you're scared because it went down $3. I'm gonna be honest with you, that is insane, but that's not trading advice. I'm a dude that's had way too much coffee. No, I've only had one sip. This is me without coffee. Okay, now this is me with coffee. Point being is that we have to think about everything that's going on around us, and some people on YouTube or the internet, the news, they like to tell you what happened in the past. So just so you know, when I got my degree a long time ago, and didn't do a lot with it. I actually worked in the restaurant industry and I washed cars, and then I worked as a real estate agent, but now I'm an economist. And I'm gonna tell you about what happened in history. Well, wait a minute, aren't you a historian? No, I'm an economist. This is what happened. We're telling you right now what's happening right now. The dollar is rising because people are selling and moving into dollars for 2 reasons. Margin calls, and they're afraid the market's gonna go down more. So will the Dixie blow past 104 and blow past that literally over 20-year resistance line? Could it? Yes, it could. How? How could that happen? The Federal Reserve comes out the other day and goes, 75 basis points. Heck with this. Let's do this. I'm Jerome P, and I'm ready to do this. I endorse this rate rise. I don't know if Jerome sounds like that when he gets fired up, but gosh darn it, sounds good. Is he gonna do it? No, he already told you. He told you in the last meeting, just so you know, we do not expect a 75-point rate hike. And then all of a sudden, I mean, you saw the move. The dollar was going up that day when he came out and said 50 basis point hike. And he says, oh, and by the way, this notion of 75 basis points next month is not gonna happen. And the dollar, the Dixie, wham, one candle smacked it down a notch, almost like, I wanna say 1%. Why? It's because that's what the traders want. They want, the traders in the dollar, they want that interest rate to go up. Jerome Powell's telling you right now, that ain't gonna happen. Why? Because Jerome Powell is telling you, we can't handle it. You can't handle the truth. Guys, what movie is that from? Can you hashtag that? And then it tells me that you've been here this long. Look, I love to do these rants because people need to sort of wake up. It's like, hey, one day I'm doing this and all of a sudden I'm not. You're like, whoa, wait a minute. You were buying on fundamentals today and now you're not buying on fear. I'm just letting you guys know. That's how I approach it. None of this is trading advice or financial advice. Can silver go to 16? Heck yeah, it can. People are like, whoa, what? Yes, it can, because you don't know the craziness of the Fed. I don't think we'll ever have a Paul Volcker moment. I don't think the Fed has it in them because it would be too obvious. But could it happen? Yeah, somebody can come out, guns a-slinging, come on, let's do this, let's raise rates. That could happen. I don't think it will. I'd be shocked if we make it past 1%. Let me know in the comment section below how far you think the Fed can raise the Fed funds rate before everything comes tanking down. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.